A new modern era low for rates. Will it reignite a building boom at the expense of savers?
Look, the simple answer to that question, in my opinion, obviously not financial advice, is that the government is going to lower the rates. Very important difference. Lower the rates even further. They've done 1 quarter now. They'll probably do another 0.5%, so 2 rate cuts. By the end of the year, nothing new. JP Morgan, I think, said they're banking on another actually 3 cuts after this recent one, bringing it total to 4 cuts just recently within 12 months. They're going to do it. They're not going to revive the building industry. They're not going to revive anything. They are going to destroy savers, which is why I am thinking about what's the best thing to do for the responsible folks like myself who have not jumped in all into property investing, interest-only loans and that sort of stuff that doesn't get you anywhere in the long run. But in the meantime, the government is siphoning money from you through the tax on your deposits interest, but then you don't get much interest either, so you're screwed any way you look at it. Also, the blame game has begun. Well, probably never ended, but does this man look convincing to you?
And bashing one bank, the ANZ ignores the Treasurer's warning to pass on the rate cut in full.
And I think in that case, the ANZ have a lot of explaining to do to their own customers.
Didn't you know the government's on your side and they are bank bashing at the moment for your own benefit?
And I think in that case, the ANZ have a lot of explaining to do to their own customers.
The Reserve Bank Governor delivered a 25 basis point rate cut today, which wasn't a surprise. But what was a surprise was his stinging attack on banks that don't pass it on in full.
See, even the Reserve Bank Governor, Philip Lowe, is bashing banks again for your own benefit. They really want to look after you, don't you know that?
In a speech tonight, Governor Lowe departed from his usually non-committal stance on bank rates, saying he'd like to break with his usual practice and, yes, this reduction in the cash rate should be fully passed through to variable mortgage rates. In a speech tonight in front of business leaders, Governor Philip Lowe defended the rate decision, saying it was necessary. He took questions following the speech. I asked why, given nothing had changed since May, why didn't the RBA cut back in May?
Seen at the May meeting, inflation come in lower than expected, and we were watching the labour market outcomes. And since the May meeting, we had confirmation that wage growth remained quite low and the unemployment rate did increase. We're seeing quite strong employment growth in the Australian economy, but it's not driving unemployment down because more and more people are joining the labour force. So as I said in my prepared remarks, that gave us more confidence that the economy could sustain a faster rate of employment growth without putting pressure on capacity. So those 2 pieces of information we received between the May meeting and the June meeting were really critical and confirm this idea that the labour market still has a lot of spare capacity, and we're really responding to that today.
More to the bank's reaction in a moment, but while borrowers will welcome today's cut, the RBA move is a sign of a sluggish economy. Stephen Long has been out talking to tradies who say the slowdown is already costing jobs.
The work's nearly done on this home at Bronte and Sydney's East. And for these carpenters, things aren't as busy as they used to be.
I've suggested we're going to run those 2 rafters into this one over here. We've certainly noticed a downturn in the residential side of things in the last maybe 6 months or so.
I still don't understand why we're having this downturn. I mean, there's no real reasons. I mean, the unemployment is still low, about 5%. The interest rates are at the historic low at 1.25%. The immigration is strong enough, meaning that we've got enough people coming in and hopefully buying things. As Philip Lowe just said, though, the problem is that there's more people coming in and looking for work than the economy can produce jobs. But then you can't stop the immigration because then who's going to buy all the properties and other things that we rely on? Jerry Harvey is going to have to sell stuff to someone. So there's the retail, there's the building industry. So why is there a downturn? Does anyone know? One thing I can think of is that the Chinese nationals, so Chinese from China, have pulled out. I don't think they're buying anymore, but nobody's actually mentioning that. This is the elephant in the room. Honestly, nothing else has changed. If anything, things have gone better. The interest rates are lower than they were. Banks and other lenders are loosening up the criteria once again, so that's getting better. One thing's for sure, you don't have to be a genius to conclude that the government, the central banks are panicking, because the Reserve Bank is cutting already the lowest in the history of Australia rate from 1.5 to 1.25%. Yet again, as far as we can tell, apart from the Chinese not buying property anymore, nothing has changed. And another positive thing that is ongoing in the Australian economy is that the price of iron ore has kept up, and we are still exporting the truckload of it to China. So what is it? I think they know what it is, but obviously they're not going to tell us. If they knew that there was going to be some sort of crash tomorrow, they'll never say it. They've never said it in the past. Every time there's been a crash or a downturn or even a world war, they weren't discussing it, they weren't talking about it until it actually happened, and their normal excuse would be, oh well, we never saw it coming, we just didn't expect that some bad rogue nation or the dictator did what he did. I don't buy it. I think they know everything. If anything, they might even be staging a lot of it. Allegedly, obviously.
The number of people wanting work.
Rewind a year and we would be like putting huge pressure on our recruitment department in order to bring staff in just to keep up with the demand. Now we're getting guys sending 10 CVs a day, you know.
This dovetails with the rising unemployment and slowing economy that's led the central bank to cut rates to a record low.
Interest rate cuts are great news for those with a mortgage, but the critical thing here is that they are occurring because the economy is pretty weak. You know, it's all very good if you've got a house and you're servicing your loan, but if you lose your job, then that's the other side of the equation. It's not so good. So the Reserve Bank is trying to head off job losses, trying to keep unemployment down at a time when growth is still pretty constrained.
Even during the global financial crisis, the Reserve Bank didn't see the need for an official interest rate of just 1.25%, and it's probably going to get lower than that, with economists anticipating cut after cut.
We think it's really going to take a lot more than just 1 or 2 interest rate cuts, and will probably require an interest rate of 0.5%.
What a good point that was. I mean, even during the GFC, global financial crisis, our Reserve Bank didn't see the need to cut the interest rates nowhere near down to 1.25% where it is now. I mean, we had the GFC at the time. We don't have anything now. Everything seems fine, but everyone's saying that the economy is slowing. What is going on?
Brendan Doyle says it will help.
I think it'll make a big difference. I think it'll fill people with a bit of confidence, and I think there'll be the opportunity for developers to be looking at, you know, taking advantage of that. I think young families looking to build houses and renovations and everything. So I think it can only be a positive sign for construction workers.
A $1,250 annual saving on a $500,000 mortgage. But not such good news for people who rely on interest from money in the bank, and lower rates alone won't nail it. The Reserve Bank's urging more government spending to stimulate the economy.
Stephen Long there. Well, it wasn't just...
If I hear to stimulate the economy one more time, honestly, I'm going to go mad. Here's more of, hey, it's not us, it's them.
Well, it wasn't just the RBA Governor getting stuck into the banks today. The Treasurer got stuck into ANZ earlier on. ANZ Bank shocked the market by announcing within minutes of the RBA's cut that it was passing only 18 of the 25 basis points on, basically keeping a quarter of the savings to itself. Federal Treasurer Josh Frydenberg was having none of it.
They should pass on the benefits of these rate cuts to their customers, to the Australian consumers. And in this respect, I think the ANZ have let down their customers. Well, I think the ANZ has let down its customers. There is a legitimate expectation that this rate cut is passed on in full to the customers of the banks. And I think in that case, the ANZ have a lot of explaining to do to their own customers.
To me, that looked like an actor who is trying to recall and remember his own lines. Of course, this is not an actor, this is our treasurer, I was just saying. Allegedly. My verdict and conclusion is that the Chinese buyers have deserted the market and they're not coming back.